I'm Russell Rhoads, Director of Education at the Options Institute. I'm here at the 33rd annual U.S. version of CBOE's Risk Management Conference. I've got the chance to talk to Joanne Hill and Karan Sood from CBOE Vest. Joanne was involved in a panel discussion today about targeted strategies, and we always like talking to Karan because they've always got something in the works over at Vest. Joanne participated in a panel discussion today, but I'm going to start with Karan. I want you to tell us a little bit about Vest, and then I want you to use the cake analogy that I like so much.
Sure. Hey, thanks for having us up here. It's a wonderful event. Always a pleasure to be at this event. So yeah, what we do at Vest is we make target outcome investments. A simple definition of what that is that we build investments that target a certain outcome out in the future. It has a very specific day at which the outcome is achieved, a specific risk that the investment will partake to achieve that outcome, and a specific return that it's being targeted. And so yeah, we build the investment in such a way that we maximize the probability of achieving that outcome. The building blocks for our investments are options, right? And this is, I guess, an options conference, and hence the reference to your analogy. Looking at it from an options perspective, we believe options are great building blocks of very good investments. But that's what they are. They are building blocks. They're ingredients. They're not the cake, right? So we build our investments in such a way that we are trying to sell the cake, the actual outcome that's achieved through the investment, and not the ingredients, which are options. Very key ingredients to make the right cake, but not the thing that we sell.
Yeah. No, I really always like that analogy. And of course, we like what you're doing over there. Joanne joined you guys just a few months ago, and as you started your presentation, I liked how enthusiastic you were about the innovation that they've got going on over there.
Yes. So I've been fortunate to spend a long career in innovations in options, futures, now we call them derivatives, and so and I've always felt that both institutional and high net worth investors were really underutilizing the options in terms of the way they can reshape return patterns, is the term I like to use, to achieve targets or return profiles that they really want. And what up until most recently, we really haven't had the terminology and the tools to really think about how powerful options can be in creating target outcomes or return patterns, because we've been looking at everything in terms of expected return and symmetric risk, right? Standard deviation. And also we've been thinking of asset allocation in terms of 100% equity exposure, right? Everything is measured against a fully invested equity benchmark. So that sets the bar very high for any option strategy to ever come and be appealing, right? But things are changing now. Investors are really focused on what downside, not just total risk, but downside risk, thinking of upside participation. And so some of these strategies that use tool options as the building blocks are really now can come to the fore and show what they can do for investors.
And during your part of the presentation, you referenced one of the strategy benchmark indexes that does exactly what Vest does.
Yeah.
Can you describe that a little bit more?
Sure. Well, there are several target outcome strategy indexes, and one of them is more of a smart beta or enhanced growth that looks to deliver a multiple of returns in the upside. Another one is more focused on downside risk. But the one I talked about today was really aimed at delivering high levels of consistent cash distributions or income. And so I think that it's generally accepted now that the volatility embedded in option prices is higher than what actually occurs, either in the recent past or the future. And so this volatility risk premium can be used as a way to enhance returns. But the problem is many of the old approaches of doing that were either illiquid or required a lot of trading. But the Target Outcome Index SPRI, so it's the CBOE Range Premium Index. So this looks to sell calls and puts pretty far out of the money. So basically there is a wide range of monthly returns during which you're able to capture and keep this income. And that's what it's structured around. And so it's aimed to compete with sort of lower duration fixed income investments, but really has very consistently good performance with very low levels of downside risk.
And I'm going to put you on the spot. Look out, and you really don't know this was coming. Is there anything you guys are working on right now that we should keep an eye out for, or?
So, you know, how we build the target outcome is to match it to an investor's need, right? There's of course the total return philosophy of investing, which is, hey, let's just drive decisions, investment decisions, to drive as high returns as possible per unit of risk. Another way to look at it is to see what's the real need that the investor has, or what's the future liability that the investor is trying to fulfill with their investments. And there are lots of needs out there, right? So with this specific index that Joanne mentioned, there is the need for consistent income, right? So we have said 6.5% over the 1 month treasury is a general yield need for most fixed income oriented investors, and we're going to build an investment strategy that takes just the right amount of risk to deliver that. Now there are several other needs around managing your inflation risk, so we can set a strategy which is benchmarked against inflation. That's something we're working on. Other strategies which are targeting a certain level of downside protection and saying, this is the maximum amount I'm ready to lose at a specific date in the future. Now get me whatever return on the upside as possible once that downside is taken care of. So we already have an index like that and a product linked to that index, but we have others that are versions of that we're working on. Right. So yeah, be tuned for a lot more products like that.
Okay.
And also the products we have out now are all centered around S&P 500. But a lot of these same approaches can be done to other segments of the portfolio of investors, right? Like Russell 2000 or international or emerging markets. The same concepts can be applied. So that's another area that you may see something from us.
You know, FTSE Russell's here, and
Right.
and they do, you know, the Russell 2000, of course, and some international indexes, and we work closely with MSCI. So I'm sure that all those markets will be applying, or you'll be applying the same sort of methodologies there.
Right,
So,
right.
all right, I've been speaking with Karan Sood and Joanne Hill from our partners over at CBOE Vest at the 33rd Annual Risk Management Conference.